Last week, 84% of US companies that were reporting their earnings beat expectations. Big tech is cutting jobs due to AI. One of the biggest mergers in entertainment is just about to go through, and a huge shareholder win in sustainability has just quietly gone on in the background. What a lot to digest. So what does all this mean, and what does it mean for you, your investments and your money? Hi, I'm Zoe, and this is my channel, Words on Wealth, where I break down the major headlines into the things that you need to know for your investments every week. So first up, it has been another bumper week for earnings reports. Often we tend to see that companies do cluster together when they report, deliberately or not. And what this means is that there's normally a flurry of headlines and market movements off the back of it. Now, last week, nearly 20% of companies on the S&P 500, so the 500 biggest companies in the US, reported their earnings. But there's some really good news off the back of it, in case you're feeling some doom or gloom. 84% of them beat expectations. So before they release their earnings, analysts also release how well they think they're going to do. And often, a lot of share price movements hinge on both these expectations, how well they perform in comparison to these expectations, and then the actual performance as well. So this is all quite strong news, and as a result, most major US stock markets ended the week in the green and on highs. So what does this mean then for you and your investments? Well, whilst we also saw a pause in the ongoing tensions in the Middle East as the ceasefire continued, what this means is that if you've got investments in the US, they will have likely looked relatively rosy last week. But it also signals strong forecasts for the next few months. What these reports suggest is that actually things aren't perhaps as bad as many are fearing, and whilst yes, we might start to see an impact of some of the conflict, actually most companies are beating expectations and still looking pretty strong. And that all has good news in the short term for us as investors as we're looking at our portfolios and hopefully expecting to see some continued strength. Now, interestingly, it wasn't quite as rosy all around the world. In fact, European stocks didn't end the week on quite such a high as US stocks. In fact, most were down. And the main reason seemingly for this is actually off the back of those ongoing tensions. There's fears still around what the impact could be of inflation and other sectors being hit as well by the likes of dragging inflation and increased oil prices. What that goes to show for us as investors is that there's always winners and losers, and there's always different reactions as well to what is going on. Whilst the US looked positive last week, the European market indexes weren't quite so strong. And sometimes there's not that much rhyme or reason to it. So having that level of geographical diversification in your investing portfolio can be super beneficial when we see weeks like the last week having taken place. Which brings me on to a really big theme of last week and possibly the last few years, you could argue, which is AI. Facebook owner Meta announced that they'd be cutting 10% of their workforce because they need to make cuts and savings due to all of the spending that they're putting into AI. Microsoft also announced that for the first time, they'll be doing voluntary redundancies. And they're not the first tech companies to do this year. In fact, we've also seen cuts announced by the likes of Amazon and Oracle as well, some key players all off of the back of saving for AI spending. So what we're seeing here is the real effects of how costly it is to scale AI. Some of the major data centers that are being built are really having billions poured into them by some of these huge tech companies. This has a knock-on impact too. Last week we saw another AI machine, Claude, release its latest iteration of their design features. And what this can mean is that things like decks, things like design for apps can be done super quickly and all with AI. And we saw other companies such as Adobe, Figma and Canva, who all really specialise in that market, but not so much on the AI side, suffer as a result of the announcement from Claude. So what does all this mean for you and your investments? Well, AI is one that we're going to have to keep watching. It's not one that any of us can predict quite where we're at, and it seems to be ever changing, making it ever more important that you do keep up with some of the headlines that you need to know, because inevitably, if you are invested, then your portfolio will be exposed to AI, be it directly through companies that are focusing on AI, or be it through companies that are just trying to keep up and using it and applying it, or indeed losing out because they're not applying it quite as quickly as others. So what this really means as a takeaway is that it is an area to watch. It's growing. It's not going away quite yet. But on the flip side, it's costly. So focusing just on AI could be really, really difficult and potentially dangerous. Make sure that there is, wherever possible, a balance within your portfolio. Because what this means is that yes, there may be some short-term growth opportunities within that AI sector, but equally, there might also be others that really struggle or indeed don't quite match up to what AI could or couldn't do in the future. Now, one story that flew under the radar but is actually quite significant for both sustainability and the power of voting rights that shares can bring is a tale that follows BP, the major oil company listed on the London Stock Exchange. At its board meeting, BP tried to change the way that it's going to report various different emissions. The reason why it did this is because it says that actually enforced reporting now means that it's null and void. But shareholders voted against it, or rather they didn't give them the majority to pass it through in the way they wanted. BP will have to keep reporting these metrics to keep those that are holding BP shares and voting accordingly happy. So what does this mean then for you and your investments? Because that was a little nugget there. What it means is that your investments in your portfolio might go beyond just their performance. And if you're thinking about sustainable investing, it's not necessarily what you just exclude, but also the way in which you behave with your investments. And last but not least, over in the media world, Warner Brothers and Paramount have had their $111 billion deal approved. It's been going on for months, whereby we've been trying to see this merger go through, but there has been a lot of opposition and they're not quite out of the woods yet. Shareholders in this case voted yes to the takeover, but a hard no to a $700 billion payout for the potential CEO that is coming over. There are also over 1,000 big names in Hollywood that are opposing this takeover, with an open letter having been signed by many, and the competition regulators have still got to see this go through quite yet in both the US and across Europe as well. So what does this mean then for you and your investments? What it means is that there's a major shake-up going on in a big industry, that is the entertainment industry. This merger could really make for quite a power company out there. What that could mean is decreased competition, potential for higher growth within the investment sphere, but also potential for higher concentration. So if you're looking at your portfolio and you have a special interest in that entertainment and arts sector, it may well be time to continue to consider diversification, because that major player could just be getting that little bit smaller. So there you have it, some of the main takeaways from last week's markets and what they mean for you and your investments. There's been some strong earnings, some ongoing uncertainty within the world that is impacting different areas in different ways, and some shake-ups as well within AI, media and arts too. As always, let me know what you're seeing in the markets in the comments. Do make sure that you like, subscribe and turn on your notifications if you're enjoying these videos, and I'll see you in the next one.